Hey everybody, Abdullah Shamari here with you. Today we're going to be going over the financials and doing a financial analysis of Gevo Inc. It's a stock that's been pretty popular over the past few weeks. The stock has had an incredible run from about $2 a share back in the summer to now it hit above $11 yesterday, and today it took a little bit of a dip when it made the announcement that it's going to do another offering. The company's just building up cash reserves in order to be able to build the production facilities that it needs for its hydrocarbons. Company has significant agreements with various customers for a buildup of about 1.5 billion in contracts and agreements over the lifetime of those agreements to produce and deliver hydrocarbons to various customers. As a result, the company has huge potential. In addition, in the current week, it was announced that the co-founder and CEO was appointed on President Biden's science team, which is huge again, as the company is trying to build this technology around hydrocarbons and renewable energy. It's a huge advantage for the company to have its co-founder on President Biden's science team. So today we're going to be going over the finances for Gevo Inc. to give a little bit of insight to those investors who might not be able to read through the 10Q or 10K or might not have the time. We'll just go through a quick glance, highlighting the main points and showing how Gevo has set itself up to be in a great place to be able to in the next few years generate tremendous amount of revenue and continue to build the company. So first, we'll be going through the balance sheet. Here we can see the company has a significant amount of cash, $80 million, whereas in December 31, 2019, they only had $16 million, which is a result of the over $40 million offering that they did earlier in 2020. And they just announced in 2021 that they're going to do a $350 million offering, which again gives them an additional stockpile of cash in order to be able to build the production facilities that they've promised in some of their contracts. Besides that, we can see the assets are significant. The liabilities are very minimal, 18 million compared to 153. We would expect most of their assets to be property, plant, and equipment or fixed assets because they're building these production facilities and are building equipment in these facilities. Besides that, we're moving to the income statement. Here, people might not be impressed as far as the revenues. The revenues have decreased significantly. The company has had a shift in their sales in that they're not producing and selling ethanol anymore. In the current year, the demand for ethanol has decreased tremendously because of COVID. They're moving more towards hydrocarbons, and you can see the hydrocarbon revenue for the 9 months ended 2020 and 2019 are pretty similar. And also the cost of goods sold are pretty similar. And their gross loss are also very close to one another. We look at their net loss. Each of the 9 months ended 2020 and 2019, again, very similar. So the company is not spending a significant amount of money or unnecessary funds for administration and just general expenses. They're being fiscally responsible. In addition, they're doing these offerings to get more cash due to the rapid movement of the stock price. Next, want to move to the statement of cash flows. The company, again, we went over the net loss. The statement of cash flows helps to represent how much cash the company used in operating activities, in investing activities, and financing activities, or how much money they might have gained from each of those three. In this case, the company's used up about $14 million worth of cash in operations the past 2 years. With regards to investing activities, they've invested a little bit more in 2019 and probably plant and equipment compared to 2020. In the current year, they've had a significant amount of financing activities. They've had the offering, and in addition, they're going to have additional offerings. So this is a quick glimpse of their financials. We just finished the financial analysis of Gevo. As you can see from this graph, the stock has done really well over the past year. I believe that the company will continue to do well based off of their new direction with selling hydrocarbons and their significant backlog of hydrocarbon contracts. I think the stock has tremendous opportunity. Um, the stock was at $11 earlier this week. It went down significantly today because of the announcement of the offering. The offering was at $8 a share. Generally, when an offering happens, the stock will climb down to the price of the offering because investors are seeing that new investors are coming in at that price and they want to be able to lock in some of the profits that they saw. But we see aftermarket that the stock has gained back some of the percentage that it had lost. Is up 8% aftermarket. So again, this is a great company to invest in renewable energy, and we know that with the new administration, they're putting an emphasis on climate change, renewable energy, renewable fuels, moving over to EV, etc. And Gevo is one of those companies that is working towards that. In addition, as you can see in the article down here, Francis Arnold, the co-founder, is going to be on Joe Biden's science team. So again, that gives them significant leverage and understanding what the administration is going to do, and then also putting Gevo at the forefront of the renewable energy efforts in the country. So Gevo is a great stock. I've been in it since about $1.70, and I'm sure many other people have been in it even lower than that. But it'll continue to grow. It'll continue to do well. It's the third largest stock in my portfolio, and I will plan to hang on to it for as long as possible, unless I see the fundamentals changing or them not being able to meet some of the milestones on their contracts. So stay tuned for any updates. But currently, I'm long on this position. As always, make money, enjoy life, peace.